In this video, we're going to go over the basics of a reverse mortgage. And the reason why I'm doing the video is I've done hundreds, if not thousands, of reverse mortgages throughout the years. And every situation is different, but the questions that come up on everyone is basically the same. So what I wanted to talk today is basically the basics of what a reverse mortgage is and maybe what it isn't. So the first thing I want to do is just go over, it's just to explain to you who I am. My name is Dan Frio. I do the rate update every day, advising people on where mortgage rates are. And basically the goal of the channel is to educate and inform you guys is everything real estate, especially when it comes to the financing piece of the puzzle. So that being said, we're getting more and more calls in regards to reverse mortgages. So the first thing I thought we would go over is when you look at a reverse mortgage or when you Google it, what do you normally see? So this is the backdrop, and I just Googled it up here, said reverse mortgage, and this was what pops up locally near me. But you can see me down at the bottom right here, the rate update powered by Dan Frio. I'm in the top one of the market, which is awesome. But if you go through here, you're going to read these questions here. Do you have to pay back a reverse mortgage? How much money do I get from a reverse mortgage? What is the reverse mortgage in its simplest items? Or what is a reverse mortgage in its simplest terms is basically what it's asking. And then what's the rules of a reverse mortgage? So what I thought I would use is because a lot of people, they say that, you're only grabbing the data that helps your argument. I'll put it that way. Well, this is from the FTC. All right, so let's use their background and their website's information to really explain what a reverse mortgage is. And the one main question that I want to explain to everybody is what a reverse mortgage is. So let's first start out by who qualifies and what would prompt you to look into a reverse mortgage. Well, we go right here. If you're 62 or older and want money to pay off your mortgage, supplement your income, or pay for healthcare expenses, you may consider a reverse mortgage. It allows you to convert part of the equity in your home into cash without selling your home or paying additional monthly bills. All right, so let's go down through and see what it explains here. How does a reverse mortgage work? Well, let's start here. When you get a regular mortgage, you pay the lender every month to buy your house over time. In a reverse mortgage, you get a loan in which the lender pays you. The reverse mortgage takes part of the equity in your home and converts it into payments to you. Okay? The one thing I want to explain to everybody, and I even have attorneys questioning this sometimes. I used to have a radio show in Chicago, and I had an attorney on there, and he's like, well, why would my client want to do a reverse mortgage when they have to deed the house to the bank? Well, I got some great news for you. If you get a reverse mortgage of any kind, you get a loan which you borrow against the equity in your home. You keep the title to your home. The money you get usually is not taxable, and it generally won't affect your Social Security or Medicare benefits. When the last surviving borrower dies, sells the house, or no longer lives in the house as a principal residency, the loan must be repaid. Okay, so let's break all this down, how this is working so far. So what is a reverse mortgage? Well, you're 62 years or older. And then when we go down a little further, I'm going to show you the biggest pieces of this puzzle and how much money you're going to end up getting. But in most cases, people are applying for reverse mortgages because they're deficient of money or cash flow. We'll put it that way. So you have a house that you've been in for forever, and God bless you, you've spent a long time there, and now you have a ton of equity in the house, but you just have no means of paying your bills anymore. And then it gets to be really difficult trying to apply for a loan, and you can't live off of credit cards. So what's the alternative? Well, it was the creation of a reverse mortgage. Basically, for those that their house paid off or almost paid off. Okay. What you do is you put up the house as collateral, just like any mortgage. You continue to be the title owner or vested in title. What that means is you own the property. You don't have to give the property over to the bank. Okay. Let me explain that piece of the puzzle where a lot of people think that you have to give the house back to the bank. Okay. So here's what can happen. All right. In a reverse mortgage, let's say, for example, you're 62 years old and you got a reverse mortgage and it was based on the value of the house at that time and you got the loan. Well, God bless you. You had great genes and you lived to 110, right? Well, at the end of this, you owed $500,000 on your reverse mortgage, but the house is only worth 200. Well, now what happens? Well, you have a couple options. Your heirs can get the property and put it up for sale and sell it. Well, if you sell it, you're going to sell it for 200. And remember, we owe 500,000. Well, you're going to be short. Well, in a reverse mortgage, you can't be short. So what happens in this case, you can take that and pay the deficiency balance back, but you don't have to. You're not obligated to. So in that situation, you would most likely hand the keys over to the bank and say, well, we had 40, 60, 50, 60 years living in the house. We enjoyed it, never had to make a mortgage payment. The house is yours. That's the only time that it would happen. If you're in that loan so long that the interest that you owe on that loan, or the amount of money you owe on the loan, exceeds the value of the property at that time, you have the ability to hand the house over to the bank with no repercussions. You don't owe anything else. There's no recourse on the loan. So that's the reasoning behind, you hear a lot of times as well, you have to give the house over to the bank. Well, the bank doesn't want your house. Okay. They basically want you to stay there as long as you're still alive and you deem that property as your primary home. You can stay there without making mortgage payments. Okay. So let's look at it this way. You have, let's say your house is worth $400,000 or $500,000 and you own it free and clear. And you're just like, I can't afford my monthly expenses with gas prices the way they are, medicines the way it is, inflation, food and everything else. You just don't have enough money each month to survive. It's probably not a prudent idea to charge it on credit cards because most credit card rates are 18, 20, 25%. And again, where are you going to get the money to pay that loan? All right. So, which was the creation of the reverse mortgage. Okay. So let's get into the nitty gritty of what a reverse mortgage is at this point. So let's continue down the page of the CFPB and see what else they have to say about reverse mortgages. All right. You have to pay other costs related to your home. In a reverse mortgage, you keep the title to your home. That means you're responsible for the taxes, insurance, fuel, maintenance, and other expenses. If you don't pay the property taxes, keep the homeowners current, and maintain the house, the lender might require that you pay back the loan. So basically, you have to keep your utilities up, your taxes paid current, your homeowner's insurance current, and the house in livable condition. You do not have to make a mortgage payment. I'm going to explain to you, though, there are options where you can make payments to this if you want. Well, the most customary or standard program or reverse mortgage product in the country right now is called a HECM. They're federally insured reverse mortgages and are backed by the U.S. Department of Housing and Urban Development, also known as HUD, and it can be used for any purposes. How much can you borrow? Okay. Basically, it breaks it down to this. What is your age? What type of reverse mortgage you're selecting? And we're not going to go over all those options. I just want to explain to you the basics of what a reverse mortgage is. And if you're intrigued and want to learn more, please give us a call. The type of reverse mortgage you select, the appraisal of the home for an interest rate, the financial assessments of your willingness and ability to pay the taxes and the homeowner's insurance on the property. In general, the older you are, the more equity you have in your home and the less you owe on it. That means more money to you. Before applying for a HECM, you must meet with a counselor for an independent government-approved counseling session. Some lenders offer proprietary reverse mortgages also require the counseling. And the counselor is required to explain the loan costs and financial implications. The counselor also must explain the possible alternatives to the HECM, like government or nonprofit programs, or a single or proprietary reverse mortgage. Sorry, that was a little tongue twister there. Let's go down through here and see if there's anything else that we should be covering on this page. If not, I will go over the specifics just to break it down like a scenario. So, for example, let's say, like I was stating before, you're running short each month. So you have multiple options that you can do. You can take a lump sum distribution. You can take monthly payments. So you put up your house as collateral, and let's say you're getting $2,000 a month in Social Security and pension, and it just doesn't work, and you're about $1,000 or $1,500 short each month. You can set up this program to send you a monthly distribution of $1,500. Or you can just set it up that it's a line of credit to use when you need it. The best time to apply for this, or a good time to apply for this, is in many cases. One, let's just say you're house rich, but money poor. Okay, meaning you have your house virtually paid off and you got $500,000 sitting there, but you have bills coming in that you can't pay, and you're like, okay, I'm cash or house rich, but I don't have enough money to pay my bills. So instead of selling the house, you can do it this way. So let me explain how this works, and let me explain the payment options that you have when you're making payments or proposed payments. Okay, so how do you pay this back is basically what I'm saying. Well, you get the money in any denomination you want, the lump sum, the monthly distribution, or whatever. Well, now what can you do? How does the balance grow? What's happening behind all this? Okay, so think of it this way. You have a free and clear house, but I need $100,000 to pay off all my bills, and then I'm set. Okay, so I initially take $100,000, and the rate is all out there, whatever. So now you close on the loan, you're good, and now what happens? Well, you start getting statements. So those statements are going to give you options to pay if you want to pay. So you don't have to make a mortgage payment. That's the whole gist of a reverse mortgage. What happens if you don't make a mortgage payment? Well, the interest that accrues on the money that you were lent just compiles. Okay? So you might not care, or you might I don't like that. Well, you can then maybe make an interest-only payment if you want. So let's say you took out a lump sum, and each month that lump sum, the amount of interest accrued on that lump sum is $500. Well, you can send in $500 a month, and it'll stay at the current balance that you have, but you'll continue to pay the interest. So in this case, we borrowed $100,000. We're paying the interest every month. That's all we can afford right now, but we continue to owe $100,000. Okay, so that's how that would work. Or you can make payments of the whole thing. So let's say, for example, you just don't qualify for a loan. You have enough cash coming in, but it's just cash. It's unrecorded. It's untaxed. It's all these variations of things, but you can't get a mortgage. Well, you can actually use a reverse mortgage to get a mortgage. Okay, and that's kind of what it's for. But what I'm getting at is you can make payments. So let's say, for example, I don't qualify because of my income on how, I get a lot of cash and everything else. So I'm like, I just have no way of getting money. Well, in this case, I can get money, okay? And because I'm getting cash in, I can actually make payments to turn that into just a normal mortgage. Because basically what this is, a reverse mortgage, is technically an FHA mortgage with, I like to explain it this way, it's an optional payment plan. You don't have to make any payments. You can make interest only. You can make a full payment. You can send $1. You can send it as much as you want. That's the benefit. So hopefully with this little information that I give you, we didn't cover every program, how the rates work, how the costs work, and everything else. I just want you to understand the basics behind a reverse mortgage, when it's used, when it's most commonly used, and who qualifies. So if you have any other questions that I might be able to answer for you, we would love to be able to help you. Best way to reach us is right here. You can go to therateupdate.com. 800 number is 844-775-5626. You can schedule an appointment with us right up over in this section here. Or if you want to even chat, you don't really want to call or do emails, we have a chat bot right down in the bottom here. That'll pop up and you can ask any questions that you want there. But if you want to reach out to me, my name is Dan Frio. All my information is down below. Love to be able to talk to you, explain all your options to you if you're looking in regards to a reverse mortgage. And just to make sure you're educated when it comes to everything real estate, especially the financing portion. So thanks so much for watching. God bless. Have a great day. Forward to hearing from you.